Welcome to our final webinar, which is titled Third-Party Marketing Companies. Are they the best route to raising assets in the UK? And there will, of course, also be a spotlight on the UK wholesale distribution market. It's terrific that so many of you have taken the time to join us today. We have about 30 online already, so really appreciate your participation. And please do remember to use the chat box if you have any questions for our expert speakers today, who I will introduce later on. The reason they're going to be introduced later on is because I have a couple of slides to run through from our third-party marketing report. For those of you who don't know me, my name is Nigel Silito. I run a strategic communications and research business called Insight Discovery, and we're behind the second third-party marketing reports, or I'm going to call them TPMs from now on, which this year has been titled Making Third-Party Marketing More Mainstream. And the reason why we've used this title is because it looks like TPM firms are on the up and up and actually being used by more and more boutique and mid-sized investment management companies, particularly when it comes to exploring new markets. And this is a quick plug for this report, which is now widely available. It wouldn't have been possible without the fantastic contributions from our lead partners, GemCap, which I'll introduce later, and RBC Investor and Treasury Services. We also had 5 TPM firms from Europe, Israel, and the Middle East, all contributing jointly to a series of webinars and this particular report. So as I said, please do use the chat box. This is a great opportunity for you to ask questions to Niels, Stuart, and Heiko, who are our guest speakers. But before I make formal introductions, there are some slides I'd like to run through, which basically summarize a survey we conducted amongst TPM firms in EMEA and APAC. So Sudar, if you could move to the next slide, please. We have about 8 slides in total. I promise to run through this very quickly because I really want to make this a very interactive debate. But there are 220 TPM firms in total in the world, excluding the US, with many of them, about 55 being in the UK. Obviously, there are plenty in France and Germany, 10 in the Middle East, and a growing number in Australia and New Zealand. So our report does touch on who these 220 firms are, and the spotlight today is very much obviously on the UK. But let's look at some of the key takeaways from our research study. And that is 24% of those who we interviewed, and that's a third of the entire TPM population by the number of firms, believe that their own reputation is a key differentiating factor to make them successful in this current environment. I'm not going to run through all these bullet points, but if you look at the third one, 56% of the firms we interviewed are responsible for between 3 to 5 investment management companies, with 33% of the firms we interviewed servicing 6 or more clients. And it'd be interesting to find out from Heiko, who runs a very successful TPM in the UK, which also covers Europe, as to how many companies they have on their books and what their capacity might be. 57% raised less than 400 million in capital in a typical year, but there are many others who are generating far more than that in a calendar year. And 83% represent managers in multiple jurisdictions. And we're going to also look at their business model and their fee structures as well. I think the final point is really useful to look at, and that is 50% are regulated in the countries where they market the investment strategies. And this definitely applies to Heiko's business, Hyde Investments Limited, which actually has been regulated in the UK since, I believe, 2004. And I also believe they're one of the first TPMs to have actually set up in the United Kingdom. So if we can have the next slide, please, Sudha. So how many companies does a TPM typically represent? This is our second year of this particular study. And I think what's most revealing is that the number who represent more than 10 firms, that is in pink, has increased from 46% to 56%. Next slide, please. Do they represent managers in multiple jurisdictions? Most definitely, yes, 83%. And next slide. Which type of asset management companies do you represent? There was a long list, and as you can see in 2022, in the blue, 74% represent equity managers, and also alternative managers, fixed income managers basically come top of the pile. And the next slide. What's your fee model? What I found particularly interesting here is when you look at the mix of retainer and success, that has increased in 2022 versus 2021. There are some TPMs who interviewed who solely believe in success fee, others only want retainer, but there are many who have a mix of both retainer and success. And the next slide. As to what a TPM firm typically charges an investment management company, this will give you a clue as to whether it's less than 10% of the annual management fee, 11 to 20% of the AMC, or more than 30%. And again, what I found particularly interesting here is that there are a growing number who charge more than 30% of the AMC versus 12 months previously. Next slide. And when you look to represent an asset management company, this is, remember, us asking TPM firms, what's the criteria that's most important? And again, Heiko, I'm really looking forward to getting your views on this. The reputation of the investment management firm is very key, as is past performance, as you might expect, access to fund managers, assets under management, etc. But the marketing support, for example, is not considered that crucial. And the next slide. What makes a TPM successful in this current environment? And obviously it is a very difficult environment these days. It's really the depth and size of their network, the reputation of the firm, the marketing capability, the qualified investment professionals, the regulated entity, etc., etc. But there are others, for example, which don't seem to be that important. Next slide. And is your firm regulated in the countries where you market? The majority obviously are regulated. In some countries like France, where there are 33 TPM firms, not one is actually regulated. That's because in France, it's not necessary to be regulated. But in the UK, in Germany, Italy, etc., regulation is very key. And this is something which Heiko is also going to touch on. Next slide. This is something which Stuart might want to touch on later, along with Niels, and that is cross-border and MiFID. But let's crack on to the next slide, because to be honest, there are far more interesting topics to look at, and that is which channels do TPMs typically focus on? Multi-family offices, pension funds, single-family offices, wealth managers, they're all listed and considered very important, but perhaps less so than IFAs. And where is your company headquartered? We did interview, as said, 70 out of the total sample of 210 in EMEA and APAC. And the vast majority of those we interviewed were in Europe, as you might expect. We also had 26% of the sample coming from the UK, with some in the Middle East, etc. But it's a pretty broad spectrum of TPM firms across the whole world, except for the US. And then that's it from me, I'm pleased to say, which I know will be appreciated by our speakers who've been very patient. So what I'd like to do is now open it up to our speakers, and online we have Stuart Alexander, who is chairman, founder and CEO of GemCap. I've known Stuart for many years, so welcome Stuart, how are you doing?
I am very well, Nigel. Just to clarify, I'm not the chairman. That'd be too many roles, I think. But yes, I'm very, very well. Thank you. Thanks for having me on.
My pleasure. And then we have Heiko Finkenstein. Hopefully, I pronounced your surname correctly, Heiko. Oh, if you take off mute, Heiko.
Yeah, you did. Yeah, perfect. Yeah, very German name. Sorry for that.
Director of Hyde Park Investment Limited. You're currently in the UK, I believe.
I'm in London. Yep.
Excellent. And then finally, not least, we have Niels Mort, who is also based in London at the moment, and he's head of UK coverage at RBC Investor and Treasury Services. So welcome, gentlemen. And I don't remember sending out orders to wear a white shirt. They're all looking very elegant and professional. So welcome to this third-party marketing event. And we have currently 34 participants, which is excellent because we had about 40 to 45 actually registering. So welcome everyone, and please do remember to use the chat box. So gentlemen, if I could just ask you before we come on to your individual slots, let's look at the UK market, both the institutions and the wholesale distribution. So Sudar, if you could bring up the slide, please. Thank you very much. So, gents, maybe I can ask you, Niels, to just start, and then Heiko and Stuart, please chip in as well.
Sure, Nigel. And firstly, thank you very much for having me. And yes, Stuart rung around and said white shirts only. So I'm happy that I had one in the office today. As it relates, Nigel, from a perspective of an administrator where I sit, right, RBC INTS, I think the UK market is a significant market for us, right? You can see the statistics there as to the size of it, and hence why we put a lot of focus on our sort of business development and relationship management to either the managers that are sitting here and either launching into UK focused funds or across jurisdiction, right? Luxembourg and Ireland being the two biggest in Europe, which RBC supports. I mean, one of the stats there that I'd like to come on to is obviously, I think UK are the pioneers or have been pioneers of that sustainable and responsible investing. And I think as it relates to today's conversation, I think that is a significant point in the sense of, you know, our changing environment, or at least what we see as an investor type, or at least the need of data in an accurate format, coming back out of a service provider supporting a manager, you know, does start to push towards that sort of sustainable and responsible investment aspect, right? That type of data has been a trend for us from an administrative perspective for some time now. And I think not only that, like we've already mentioned, I think the width and breadth of type of investor that you get from the UK market, either investing into European funds and or UK domicile funds, is something significant for us. I think the other one that I just wanted to quickly touch on there is, you know, the UK numbers. It's by far one of the largest, you know, largest European investments as well from UK, and obviously, you know, that point around hedge funds, but now we're also seeing an ability for hedge funds to be wrapped in UCITS wrappers, etc., as well. So it's a real important jurisdiction for us, and obviously something that's very relevant for today is that investor point.
Great, thanks, Neil. Stuart, as I know you had lots of experience at Invesco with wholesale distribution, and Heiko's firm obviously specialised in that as well. Perhaps the two of you could just touch on some of the other numbers presented here, particularly DFMs, maybe IFAs.
Well, I'll let Heiko talk about the DFM space. That's clearly his current focus. I was just going to focus on the M&A aspect, actually, because there's been a significant consolidation over the last few years with a number of consolidators going out there and buying together a number of IFA businesses to create almost, well, huge organizations. That creates very dynamic change in the way that fund managers deal with firms. Again, going back some years, you could go out there and talk to 20,000 different firms. Now, as you can see by the numbers here on the screen, those numbers are a lot less, which means your focus has got to change. It also means that the size of the fund that you're promoting has also got to reflect the consolidation of the assets that those wealth managers are buying. So that does change the distribution landscape considerably, and it will continue. It'd be interesting to see whether or not, with the recent fall in sterling, or the crash in sterling, whether or not overseas players will come into the UK market. Maybe that will happen. But over to Heiko, and maybe on the DFM side.
Yeah, I mean, I completely had the same data as Nigel, as you just also showed us. I can only stress on top of that, maybe, that the UK is also one of the pioneers of sustainable and responsible investment. Is the key, we see as a key trend for global asset managers in the futures. For instance, the UK topped in ESG strategy globally with a 93% penetration, i.e. 93% of UK-based managers and investors have an ESG process integrated in the investment process. Yeah. We as a firm, we speak to all of them. Yeah, we speak to wealth managers. I think in our case for Hyde Park is our biggest unit or channel are 225 wealth managers. 25 of those are private banks, but we categorize them also as wealth managers. We speak to 83 family offices, and we speak to 38 consultants. Here in the UK, it's really the consultants are the gateway to the UK pension funds, as only very, very few pension funds allow direct access to them in the UK, and the access is purely through consultants. But we speak nevertheless to 31 pensions and insurances, those few ones who want to invest direct and don't use consultants.
Great, thank you, Heiko. Well, what we're going to do now is focus on Heiko and his business and explore the opportunities in the UK. I did mention briefly earlier, Heiko, that I think your business was established in 2004, and many of your senior executives, including yourself, were ex-SG Warburg, or a blast from the past, that is. So it's quite a close-knit team. And some of the companies you represent include Polaris Capital Management, Rockefeller, and Mobius Capital Management. So maybe you could just quickly describe your business, the size of it, and also your main activities before I come on to some other questions.
Of course, I'm happy to do that. Thank you for having me. I mean, Hyde Park Investment is an investment firm specializing in sourcing sustainable capital for traditional and alternative fund managers and from institutional investors in the UK as well as in Europe. Our main office is here in London, and we have sales offices in Paris, Madrid, Stockholm, and Malta. Malta is our holding company, is based there. Hyde Park Investment is FCA as well as MFSA. It's a Maltese authority regulated company. We have an international team of seasoned marketers. We are 10 salespeople who speak over half a dozen of different languages. So we're very local in our approach. And since launch of the firm, you're right, in 2004, the team has succeeded in helping to raise over $7 billion. And our country coverage includes the UK, so our main country, but also Switzerland, Germany, France, Spain, and Portugal, Iberia, Italy, Holland, Austria, and the Nordics. So we are very, very pan-European. That is our edge, that we offer pan-European services, but with the UK very, very strongly in that European field.
Great, thank you. And what sort of distribution channels do you focus on in the UK? Because obviously there are so many. So what's your key?
That's a bit kind of connected to the question earlier on. I mean, we see the biggest institutional buyers in the UK are wealth managers, and we classify private banks in that category, followed by pension funds, family offices, and then even so difficult for third-party marketers to approach, but then by IFAs, independent financial advisors, and DFMs, the discretionary investment managers, and investment trust, and also in that order. We as a firm, we focus on all of them. And as I said, for us, it's the main contacts are in the wealth managers and the private banks. Yeah, just to repeat a bit, there's the numbers. In our case, we speak to 225 wealth managers, including 25 private banks. That is our bread and butter of our clients. But then followed by family offices, especially in the UK. In our case, we speak to 83 of them. Then consultants, again, they are the gateway to pensions, to the majority of hundreds of pension schemes you have here in the UK, and also to a couple of 31 in our case, to pensions who are really willing to discuss with third-party marketers themselves and directly. You know? And again, just to sell a bit the UK to the audience, but I think Niels, you did it already. But the UK is really the largest center of asset managers after the US, sorry, and with 8.5 trillion assets under management. It's for you absolutely a country you can't ignore. If you want to raise money, you have to come to the UK.
And something I've got to ask you, and it's actually implied by a question by the chatbot, is how important is it for your firm to be regulated? I've just checked our records. There are 51 TPM firms in the UK. Are they all regulated, or are you in the minority when it comes to being regulated by the FCA?
A very good question. I think we're a minority. I think I read once that about 25% of all TPMs are regulated, and then 75% are not. We, however, believe it's essential to be regulated, really essential. And why is that? You have in the UK, you have two arranging licenses, what is called, one is called making arrangement with a view to transaction in investments, and secondly, arranging or bringing about deals in investments. And we think that those two licenses are very broad reaching. So it's hard to see a way of marketing without having a license, even if you speak like we mainly do exclusively to eligible counterparties and professional investors. So I think it's a must. Is everybody doing it? No. Is England quite relaxed on the whole and very open for investors to come in? Yes. But in an environment where everything and the compliance issue is becoming stricter and stricter, I highly recommend people to speak or to be regulated. It helps you also that you are regulated, your TPM is regulated, your fund is regulated. I think the future goes definitely in this direction. We think it's essential, but we're still a minority in our thoughts.
Okay, thank you very much. And let's look at this. I know lots of boutique managers have joined this call. So which investment strategies are popular in the UK at the moment?
Which strategies you mean? Yeah, which
where are you getting RFPs and requests?
Yeah, there it is still. I mean, where we see most interest at the moment is first in everything what is ESG and responsible investing connected. Yeah, if it's global, if it's emerging market, if it's small cap, it needs to have an ESG and a responsible investing dimension in it. Secondly, we see a bigger fixed income interest lately, and people are starting to see interest emerging here. Reason being, people expect that in the US rates will turn in the summer, maybe late summer 23, and are trying to be positions ahead of that. Then I think I mentioned emerging markets already there. I mean, less so the old emerging market, more the emerging market, yeah, can call it Mark II, meaning tech-savvy, high FCF, free cash flow generation companies, good valuation, high engagement with those. So it's not the commodity cycle, it's more the really people who have their own IP and as I think they're about Asia, about Taiwan, about the Middle East as well, which has a lot of more to offer than just commodities. And then third, infrastructure. Infrastructure is something which people are looking at. So that is where I see most interest from RFPs, but also from talks.
Great, thank you. Just my final question before we move on to other guests. What's your firm's selection criteria when choosing a new manager? Because clearly they have to have a certain minimum AUM and maybe they've got to have a 3-year record. So what's your key criteria compared to maybe
you mentioned the two very important ones. Very good. I think on top of that, there are what we call in our genre, we call it the 5 Ps. Yeah. First, is the pedigree, i.e., the team needs to come from an excellent firm, which will have a blue chip business practices, and established good knowledge, and a network of people who come from this very high blue chip backgrounds. People need to be high quality, well qualified teams. I think you are that. Secondly, quite important is the process. The fund must be able to demonstrate repeatable and systematic business processes, because performance track record should not be down to a lucky run. It should be systematic and repeatable. Third is protection. By this I mean effective and active operation must be central in the entire investment of the team and of the manager. Need to be expected for us to represent the fund and to be able really to raise proper money. And then we have the so-called particulars, where I would say liquidity must reflect the strategy's underlying liquidity. Fund fees must reflect the strategy's underlying complexity. Service providers should be well regarded and high quality. And the manager really needs to have skin in the game, i.e. that a significant part of his or her wealth should be in that fund as well. And as another particular, I always mention communication skills and willingness, i.e. the manager must really commit to roadshows in the UK and be willing to communicate promptly to prospect questions and requests.
Great, thank you. I've just had an interesting question. It's actually directed at you, Heiko, and that is, why would an asset manager partner with TPM over doing the distribution themselves?
But if they have, I mean, they will do that if they don't have a franchise in Europe or in the UK. Very true. To answer the question, a third or asset manager who has their own sales team in the UK doesn't need us. Therefore, most of our product providers are not UK based, but based in other jurisdictions, might be quite strong. We represent, for instance, Rockefeller. Rockefeller is huge in the UK, in the US, sorry. At least at the beginning was not so strong here in Europe. They needed help then. Now they're building up their own entity here, but they needed in the past absolutely help in Europe and in the UK, and they're therefore kind of hooked up with us. So people who have a franchise in the UK often don't need us. Those who don't have that, for them, third-party marketers are definitely a way to have access to the institutional investors.
Great, thank you very much. If you can stay online, and if you've got any questions for Heiko, then please do use the chat box. So Stuart, thank you very much for being so patient. Perhaps you could just quickly introduce GemCap for everyone.
Thank you, Nigel. Well, GemCap is two businesses. Well, actually, technically, it's three businesses. We've got a UK company which provides facilities agent and regulatory sign-off for financial promotions. The main business is in Dublin, which is a fund platform with a management company which sits over that, and that management company is appointed by the fund platform. And on the fund platform, we have over, I think it's nearly 25 funds now, soon to be 11 managers. And those managers are based 50% in the US and 50% within the British Isles, I'd like to say. I noticed that actually one of my managers is on the call, so one of my new managers is on the call, so welcome on board.
Great. And could you, for those who aren't too familiar with the term Manco, describe what it actually does?
Well, a management company is there, as we call it as a Manco, is there to provide oversight. Ultimately, that's his main job. And a fund will either sit on a platform, and very few funds are being launched which don't go onto a platform, or there'll be a standalone. And the Manco is appointed by the fund to effectively protect the investors and ensure that the delegates which support the platform, such as the administrators like RBC, the trustee, the custodian, which may also be RBC, as well as the investment managers, make sure they're doing their job properly and they're doing the role that they're supposed to do as set out in the prospectus and the supplement. And there are certain roles within the management company which are called designated functions, and there are designated persons which support those functions. And for example, I'm a designated person for distribution. And then basically face off to all those different parties. And they cover compliance, finance, risk, investment management, distribution, and operations. And they make sure the fund is run correctly. And they do this on behalf of the fund board, and who ultimately work on behalf of the investors.
Okay, great. And what's the, from a Manco point of view, what's the benefit of working with a TPM firm?
It makes life a lot easier, actually. It makes it a lot easier. I think the real benefit is that they know the market. They give great feedback. And when it comes to going to market, you want to make sure that you've got people on the boots on the ground going in there and dealing with it. And the question was asked earlier to Heiko from the audience was about employing a TPM. One of the things I would say is that, well, if you go to market, if you want to put people on the ground, that's very expensive with no guarantee of success. You've got a huge commitment. Whereas with a TPM, you've got a contract. It could be a year's contract, 3-year contract, whatever. So you've got timelines, you've got measured expenses, you've got measured costs, and therefore measured expectations. But in other market, they actually do the selling rather than just help with distribution. And we hear it so many times that unless a fund has a strong distribution strategy, we won't take them on, for example. And not often they help when, particularly cross-border, with having a distribution license with MiFID. So that's really important. So having a Manco work with the TPM makes life very much easier for us because we've got a good regulatory framework to work with.
Okay, great. My final question to you before I come on to Niels is post-Brexit, what are the main challenges for funds domiciled outside the UK?
Well, it's all to do with what's called a temporary permissions regime. So selling into the UK, you need to sit on the TPR, temporary permissions regime. Otherwise, if you don't, you then go under what's called Section 272, which is effectively reverse solicitation, which is a complete nightmare. But you can do it. It's very easy. The only way you can get on the TPR now is to sit on a platform. And so all new funds are sitting on a platform of some structure, unless they're an established business and an established fund, because the regulator, i.e. the FCA, will not give a TPR for a new established fund. So it becomes quite a challenge. If you don't have TPR, you're not allowed to come into the UK and sell unless you're asked to by an investor. So that's the main issue. And equally for a UK-based fund manager trying to sell into Europe, it becomes a difficulty without a MiFID cross-border license, distribution license.
Great, thank you. I appreciate your input, and I'm pleased to say we have 37 joining. We still have 37 online, which is fantastic. So, Niels, again, thank you for being so patient. Everyone else.
Let's hope those 37 stay by the time I'm finished talking.
I mean,
you're putting me under pressure here, Nigel.
No, still 37. Still, I promise you. Send you a screenshot. I don't think we need to introduce RBC. Maybe you could just square off your role within RBC.
Sure. So as you know, RBC, right? Very broadly speaking, a end-to-end fund administrator with a strong transfer agency capability in Canada and key jurisdictions in Europe, right? That's Luxembourg and Ireland, to be specific. My role specifically as it relates to this is I run the sales team out of the UK. And as we've really discussed, I think UK as a jurisdiction for us, whilst our service provision isn't as broad as what we have in Europe. So in the UK, our focus is very much around custody and FX and middle office capability for some of our clients based here. It's significant for us because of the number of managers who either have a headquarters here, look to gain investment from investors here due to that broad investment universe, and then either launch in those jurisdictions that I spoke about, Luxembourg, Ireland. So my role is to run the team, keep them focused on where we're going, and I think more importantly to very much understand clients of ours, managers of ours, their need and wants from us as it relates to how they get investors into the fund, what those investors need back, and how we can support, I suppose, their differentiator, which is their investment strategies typically.
Great, thank you. The number's still 37, by the way. Promise you.
Great.
37. Good stuff. A couple of quick questions for you. Your business is clearly involved in asset servicing and supporting investment management companies. I believe when speaking to one of your colleagues, you support companies that might even, have as little as 200 million up to, let's say, $50 billion. So can you describe the services you offer both investment management companies and TPM firms?
Sure. So investment management companies, it's as I've related there. So, we've got a significant end-to-end administration for their fund vehicles, for their investment strategy vehicles or platforms, as to what GemCap has set up. So that's across your fund administration, so your fund accounting, transaction management as such. We also offer a middle office separate section, but custody and depository services. Stuart already mentioned that interaction between our custody trustee and the Manco is significant, especially in a platform situation where the ability for GemCap to have a ready to run, well overseen and regulated environment for IAMs to come on. We spend a lot of time with that Manco, and then I suppose other areas of focus for us are, like you said, custody and FX, right? As it relates to how we support TPMs, we don't, right, Nigel? I think we are a facilitator or an enabler to the manager, to the investment strategy, who is running a fund, to be able to provide an accurate account opening, getting investors into fund, understand where those investors are coming from, have a real ability to be sort of pragmatic, if administrators can be pragmatic, and bespoke approach to the data required off the back of that, in order to give these sort of much sort of different, or should we say a slightly different type of investor, the required information that they're looking for at the back of that fund performance.
Great, thank you. We've just had a question from Chris. This is directed at Heiko. First one is, what is the average length of your relationship with manager, top third, middle, and bottom third? And TPMs lead off with their AUM raised. How can their track record be quantified and verified? Heiko, can you try and answer that?
Yeah, sure. Second question, you must explain again. But first one, we created ourselves in 2004, and can you believe it? We still are paid for a relationship which created in 2004, so 18 years later. And this is one of those which worked very well. And it's a hedge fund who invests in long dated, deep out of the money options, i.e. it is completely a life insurance for you. Up this year, over 75%, up in 2008, over 300%. It is a strategy which gives you performance when you need it. That is kind of the exception, the long one. But the second one is for 12 years we're in connection with them. So we hope to be really partners with our managers and stay on there for long and do the PR, i.e. the monthly updates. We send them up, especially with the bad months. We really keep in contact with our clients and give them that. Our contract is 2 years fixed. We protect our franchise for 2 years. The shortest one was 3 years. It was with DWS when they decided that all hedge funds have to be done with another platform out of New York. And that was that. And then obviously there are some managers who are less happy with us, but they don't cancel the contract as such, as seen as an option, because we don't cost them much. So there's no doubt there will be some managers where we were not successful, but it was not because we didn't try. We definitely try, but sometimes we remain unsuccessful because the strategy is not what works out for investors. But that they are cancelled is part of DWS, not happened to us yet.
Okay. I think the second part of the question is there are lots of TPM firms that brag about how much money they might raise, billions and billions. Is there a way an investment management company can verify the amount of money you may have raised for XYZ company?
I think they must take our word for that. Of course, I can call up then the manager, and the manager will confirm it. Yeah, I suppose, or the administrator of the manager, who then most likely must be the manager himself, because the manager is paid by its fund administrator. Then the fund is paying part of that, is then paying on a monthly or quarterly basis its performance fee to the fund manager, and a couple of days, weeks later, we get an our portion of that payment from the fund to the fund manager. So they must tell you this number. The only thing to help you answer the question is the following: we would not take a manager on board if we don't think that in the first 2 years we can raise at least 100 million for the fund. If not, we wouldn't do it. Yeah, and you must take our numbers. It's everything you write down. You should make sure it's true, and because if not, it will haunt you.
Okay.
Nobody asked me that. Will our manager do that? I don't know, but I guess they would. Yeah.
Okay.
Nigel, I'd just like to add something there, which is, we've got Hager's point there about the 2-3 year contract. I think investment managers need to recognize that it takes sometimes 2 to 3 years to get that message out there, and you might have periods of underperformance. So you've got to have a full cycle of sales. When we were at TPM many years ago, we would have meetings with investors, and the fund manager is expecting a ticket literally the next day. And you go, no, it's a building process, particularly if you're a new business coming to the market, unheard of, with a track record which probably only goes maybe less than 3 years. You've got to build that traction. And when we launched a business back in 2009, a very successful fixed income business, it took them 3 years to get started. They're now at 15 billion. You know, it does take time, but you've got to give it. And I also say that, and back up Heiko's point, if a investment manager wants to quantify and qualify the success of a third-party marketer, phone up one of their clients. Just phone them for a manager, as long as the TPM's happy with that. And most TPMs would be happy, and most fund managers say, yeah, they've done a really good job for us. If they don't say that, there's a good job. I think Heiko would want to know about it. But yeah, everyone's pretty open and honest about that, I think.
Yeah, good point, Stuart. So coming back to you, Niels, what do you consider to be the main distribution trends in the UK, let's say over the next couple of years?
So yeah, thank you, Nigel. And I think I'll probably, would defer a couple of these points to Heiko and Stuart. I'd love to see their perspectives, right? But I've sort of broken it down into 3 main things, right? That from an administrative service perspective, I'd say it's around data, it's around education, and it's around alternatives. So from data, obviously the sort of regulatory landscape that is ever changing, but very much pushing towards that sort of transparency and consumable data for the investors. So from our side of things, again, that fits into the education of that underlying investor. We feel, at least we see that the underlying investor nowadays has a far, like I said, greater need or want to understand what their investment is doing by way of sustainable development, etc. But also, they also want to get consumable data readily available back to them in a real time, or at least as soon as real time fashion, right? So our ability to be able to surface that from our administration platform is definitely a trend, or at least a growing trend, that more data in a very simplified fashion back to our managers is definitely needed. And I'll say the last one, which I wanted to touch on, was the alternative space. I think we've seen a significant increase in the alternatives managers looking at sort of retail or high net worth individual investors, whether they come in through platforms, direct funds, our ability to be able to enable that, support that, be connected already, make that as easy a process as possible for that manager to go and distribute their funds to that type of investor is where we sit, and a trend that we continue to see grow.
All right, well, excellent. I'm pleased to say that's the end of this event. It's been incredibly well attended. I really appreciate the inputs from Heiko, Stuart and Neil. So thank you, gentlemen, for your time and contribution today. And for those of you who are watching, thank you very much.